Welcome everyone to Studio 8.1, episode 73, with myself, Jarvis Todd, and the publisher of Telemedia News, Telemedia Magazine, and all things Telemedia, Mr. Paul Skeldon, my partner in crime. We're going to spend the next 25 minutes talking about some of the most interesting aspects of the telemedia industry. And if anyone's been following the recent series of vodcasts, you'll know that we're drawing heavily on some of the excellent content that came from some of the experts, that's you, the industry, during the conference program at World Telemedia Dubai, which was only a mere 5 weeks ago. This week, sorry, hello, Paul.
Hello, mate. Yeah.
Right, rambling on. This week, Paul, we're going to be focusing mainly on the excellent session you put together, which was entitled DCB to Alternative Payment Mechanisms, brackets APMs. And we're going to be talking about where DCB fits in the whole kind of payment ecosystem with regards to how people are paying for MVAS services, premium content, and all the good stuff that all those high tech on the move consumers are wanting to consume. But more importantly, no point consuming if you can't get it paid for. As everyone knows, the telemedia industry is an expert at being able to onboard and collect payments from consumers where the merchant does not have a natural direct billing mechanism with them. So, Paul, without further ado, let's crack on. Brilliant session.
Dive in.
The first sort of aspect of the session, which we let's talk about where we think DCB is at the moment. Obviously, it's a strong driver for MVAS. Talk to me a little bit about how that was presented in Dubai.
Well, of course, DCB still underpins everything in telemedia. It's really what it's all about. And for most people involved in MVAS, particularly in MENA, particularly in Africa, it's really part and parcel of how content is sold and distributed. So it's very, very strong. And it's still a massive force to be reckoned with in the payments landscape. Jumping ahead to where we'll get to in our discussion but it's that role is changing and is being changed. But I think primarily it's still seen as the sort of key payment tool for MVAS, like I say, in MENA and Africa, because it just brings so much. It's easy to do, it's inclusive, pretty much everyone can do it, hence it's booming. And we heard how that's sort of panning out from Akshi Gupta, who's head of digital and account management at Digital Technology, and she had this to say.
My DCB market overview. Global DCB market size and growth projection was around 24.6 USD in 2020, and in the last year 2024 we have experienced 52.4 billion USD in the last year, and expected to grow around 60 billion USD in 2025, and up to in 2020 in 2030 we are expecting to have DCB around 100 billion USD. The
So as you see, growth is really strong. I mean, it's the predictions are there, as you see from what actually said, that DCB globally is looking like being $100 billion business by 2030, because it's got so much going for it, because it's so easy to use, because it's sort of everyone can use it. Yeah, it's important, and
Well, yeah, and it's interesting, isn't it? Because I mean, on numerous occasions we report on some of the Juniper figures, for example, on the DCB market, mobile payments sector, and we've been delighted to constantly see big numbers, big predictions, which makes everybody in our ecosystem and us particularly feel very happy that that we're on an upward trajectory. But I also feel like when we were over in Dubai, there was a kind of very much a renewed sense of kind of enthusiasm, perhaps a little bit more so than our, if you want to call it, European base, where I suppose because DCB has been entrenched in the market and incubated in the business for such a long time, and probably had to learn a lot of lessons and deal with a lot of problems to get to the situation where we are now, where it's a really tangible, credible, and important payment mechanism. And it's important sometimes to look at this through some, European eyes, if you like, and realize that, on a global scale, DCB is absolutely vitally important, particularly for anybody, any merchant that's looking to sell digital goods via mobile telephone, which, let's face it, is a huge amount of companies and a huge amount of services and a huge amount of content which is being consumed. And DCB, quite rightly, when we start talking about it from a global perspective, is super important.
Yeah, absolutely. It's interesting because it is sort of looked at that, oh yeah, well, it's great for these developing markets because it's sort of easy to do for them, but actually it works in all markets. So it's still being used in Europe. There's news sort of out this week. As you mentioned, Juniper did a survey into sort of the rise of DCB in Europe, and a lot of it's going to be used to fund things like hiring electric scooters and electric cars and sort of that mobility thing. So it's still got a whole sort of service life here. It's also used for content. And I think, again, wherever you are in the world, Europe, MENA, Africa, Asia, it has such a lot going for it. As actually pointed out, she sort of very succinctly sort of listed like what it has going for it and why DCB is such an important tool still for MVAS. This is what she said at the conference.
Go to the first one. Hello everyone, I am Akshi Gupta, Head of Digital and Account Management in Digital Technology. I am here to present the presentation about the Direct Carrier Billing DCB, and I will give you overview about what is DCB, how it's transforming digital goods and services in DCB. So let's have a walk over there. So key players involved in DCB are mobile operator, that provide DCB platform and manages the user's mobile subscriptions. And after that, we have the merchant that offers the digital goods and services and offer these goods and services to the user. And the DCB platform that facilitates and process the digital transactions and processes and verifies the users as well. Apart from this, the end user that initiates the payment process and uses the digital goods and services and utilize that when and consume that services. And the benefits of the direct carrier billing, if we talk about the benefits in terms for the consumer perspective, that DCB is providing a wide range of the digital goods and services to the user that he can use and subscribe to their service and pay the services over the time. And the benefits, other benefits are that it's very convenient for the user, no need for the credit card and debit card because user is directly paying through their mobile phone, mobile bills, payments through their mobile phones at the bills, and these are the secure transactions because these are managing through the operator, and this is a completely integrated platform. Apart from this, it's a wide availability because DCB is available most of the operators. And in terms of, if we talk about the benefits in terms of the merchant, it gives the facility to the merchant to offer their various kinds of digital goods and services to the users and expose their reachability for the users. And apart from these, the benefits are increased conversion rate. DCB reduces the friction and increase the conversion, reduce transactions cost, access of unbanked or underbanked user. In this, we can say that if user doesn't have any bank account, or so they can easily access any kind of the service they want to access using their mobile operator. In this one, and apart from this, improved customer experience. DCB provides a seamless payment experience. Benefits of the DCB for the mobile operators. Mobile operators have a specific base of the users. They give them the platform to offer the multiple various services so that they have the increase the user engagement, and they can give their user a better platform and better experience. And these DCB gives the benefits for the mobile operator. It opens a new revenue streams Revenue streams, increased customer engagement, competitive advantage, and data insights. Benefits of the DCB, apart from these, for the operator side, there are some other additional benefits that are the real-time charging, compliance with the regulations, scalability, and flexibility. Key drivers for the DCB, that it increases the mobile penetration, like in the user, in the world, the mobile accessible mobile users are growing very rapidly, and the growing the mobile subscriber base, and the people are quite increasing in terms of using the mobile internet adoption. Rise of digital content, like people are quite getting aware about the digital content, and they are quite eager to get to subscribe to the services. Convenience and security, because the DCB offers a convenient and secure payment method. Operator support, in this DCB side, the operator gives a complete support and promoting the services as a secure payment method. Key restraints, regulatory challenges. DCB sometimes faces regulatory challenges such as the compliance with the data protection, anti-money laundering laws. Technical issues such as the billing error, sometimes we have already seen in the practical scenario as well. Sometimes there is an issue on the operator side and billing get affected, so that day revenue has completely got lost. So these kind of the challenges we have faced on the multiple times on the technical side. So these are the restraints that we have faced for the DCB side. Competitive from the alternative payment methods. DCB faces competition from the alternative payment methods such as the wallet, credit card, or debit card.
So there you go. I mean, as we've mentioned many times before, there are restrictions with regards to DCB. However, ultimately, one of the greatest assets that we have with regards to this payment mechanism is the ability for it to be super impulsive. Simple clicks to pay without any previous setups, which obviously filters very much into some of those developing markets where we're going to talk about alternative payment mechanisms later, but there is an additional level of infrastructure required. We've talked about the importance of buy-in from the mobile operators, and I think we're going to pick up on that a little bit later. But yeah, I mean, basically, I think what are your thoughts on what Access said there?
Yeah, well, I think the thing is that sort of there are a lot of huge benefits, as we all know, and that's why it's booming. But I think it is interesting that even a big fan of it, as Axie is, there are sort of drawbacks to it. And increasingly, one of the biggest drawbacks we've seen with that is competition from these alternative payment mechanisms,
and also weighing them up against the cost of transactions, right?
Yeah, absolutely. I think it's that cost issue, it's the complexity issue. I think it's about where consumers are at with it. I think it's not just, it's very easy to think of developing markets where people they don't have access to any of the sort of, cards and wallets and all that kind of stuff. They're just going to use DCB because, poor them. But in reality, that's just not true. And so this rise of alternative payment mechanisms is becoming an issue. It's particularly pronounced in developed markets, but I think what's happening there with it is going to sort of roll through into the developing ones as well. As Sunil, for the co-founder and CEO of Solaris, pointed out in one of the other sessions at the event.
Yeah, this was interesting.
So what we see is in the mature markets, DCB is not the preferred payment method. It's more of a credit card, Apple Pay, Google Pay. If you look at it, if we were to talk numbers, like in the US alone last year, 52 million people paid with Apple Pay, and 30 plus million people pay with Google Pay, and is growing significantly year on year. So once you start paying, I guess, here also a lot of users of Apple Pay and Google Pay. Once you start paying with Apple Pay and Google Pay, you don't go back to any other payment method because of the convenience and the security. It makes it so much easier, the whole ecosystem. And plus, and that if the high ATV, average transaction value, you can go with credit cards much easier on that because of the limit on the credit card and all is much larger.
Okay, so that's Sunil's view. That's particularly looking at the sort of developed markets where it is all about wallets and cards stored in wallets and all that because it is how we've all adopted it. A lot of people in developing countries have some sort of bank account or access to a bank account or access to a card. Even if they're kids, they might have their parents' card details and that kind of thing. It's made that kind of way of paying for stuff as simple as the 1 or 2 click process that you had with carrier billing. So in those markets, developed markets, it's very much moving towards those sorts of ways of paying, but not exclusively. There's it's a mixture really of everything.
Yeah, and I think it's worth pointing out. I mean, one of the great sales pitches for DCB versus credit card back in the day was when you had to physically key in a credit card number, which A, was not very user friendly, and B, made you feel a little bit unsure because you weren't particularly comfortable with putting those credit card details and PIN numbers onto the web. I mean, we've moved on a long way from that now with the fact that the most devices have got those credit cards already built into them, so it is kind of sort of ready, oven ready, and therefore that kind of impulse pay sort of asset that DCB had is not necessarily there if you're in a developed market. But of course, the other issue that's been brought up, numerous times is that every single market, every single territory, every single continent has a very different makeup of consumers with ways that they can pay. And of course, there is still an enormous amount of people that do not rely on credit cards. I mean, and even as it was mentioned earlier, in developed markets like the Netherlands and Germany has obviously been a classic where credit cards are not ubiquitous. So I suppose the ultimately the mix is, sadly, that you need to blend almost all of these things together and try to match them up with the variety of different consumers' behavior, whereby you get that sort of sweet spot where you're maximizing your conversion rates, minimizing your basket abandonment rates, which is obviously what it's all about. And as we mentioned with marketing in our last episode, boy, oh boy, is it a complicated web and a moving target for anyone. However, the telemedia industry and the telemedia marketplace and the people that we represent do offer solutions to companies that have got good propositions for high tech on the move consumers that want to buy their stuff.
Absolutely. I mean, I think this is the thing is there are a lot of different ways now to pay, and they're all convenient. They all have different price implications, as we'll come to for the merchants, but for consumers, they're lots of different easy ways to pay. And I think what's happening is consumers are using different ones in different ways, depending on what they're doing, where they are, what it is they want to spend their money on. And so what we're looking at for the billing providers in the telemedia industry is that they have to have all of these tools and they have to offer all of them because it's all mixed together. Which is a point that actually again made on the panel that we had at the event. This is what she had to say.
Things will coexist. Okay, so DCB is also there, payment integration, payment wallets also there, and the Google he's told that the people prefer to pay through the Apple Pay or Google Pay also. It depends on the market trends, it depends on the user behavior, how he is feeling comfortable to pay through for subscribing to any service or any purchasing for anything. So it depends on the user behavior, how he is feeling comfortable to do the transaction.
So there you go. We're both in violent agreement. I mean, the consumer behavior element of this cannot be taken out, and it's really interesting to remember that whilst from a commercial point of view, you're looking at the numbers and the percentages and the costs of providing the services or the cost of the billing. Ultimately, the consumers are driving things, which I think probably means that is one of the reasons why DCB it continues to play an important part in the payments ecosystem. But it is expensive, let's be honest.
Yeah, absolutely. And I think I think it's important to say that DCB is in no way kind of dead or dying. It's still going very strong. It's just going to be part of a different mix of how people pay. But it does come then down to the costs of all of these different payment mechanisms to the merchant, and the cost of carrier billing, which has always been a bit of a problem because in some markets it can be that the operator takes 30, 40, 50, 60, even 70% in some
Yeah.
places. Yeah, that does put people off using it. And in particularly in markets where there are alternative payment mechanisms, because why wouldn't you go for the one that's going to not cost you as much? But that said, it's still got a lot going for it, and the cost is an issue. But how much of an issue sort of really depends on sort of how you use it, doesn't it? Are you driving more business and getting business you wouldn't have got if you didn't have it, and that kind of thing. So it's a way of looking at how to sort of try and balance that, even though things like cards are much quicker and cheaper to settle and more secure and all that kind of thing. As Sunil from Solaris went on to say.
Asking a lot of our customers, what would you prefer? First of all, as a merchant, you're offering to your customers, if DCB versus cards, both options are equally there. Which one you prefer? Actually, interestingly, all of them said credit cards. I was like, why? Why would you pick credit cards over DCB? Few points they mentioned. With the operators, they charge a lot of money, between 15% to 70%. 70, that was an eye opener for me. I was like, 70%?
I could be even higher than that.
Yeah, I was like, wow. I was like, even starting with 15%, that's already very high as compared to credit card. And the second thing they mentioned is the settlement cycle. That goes on for months, like, okay, that you have to wait many months and stuff. And third part is the security, that you're not sure that all of your money will come back to you or not.
Okay, so no surprises there that merchants would prefer to get customers paying with credit cards because economically they're going to get much more of the transaction than they would through DCB. However, and I don't think anyone would dispute that that makes perfect sense. Of course, one of the great things about DCB, despite the fact that it costs so much money, is that it is such a brilliant way of instantly onboarding a customer. And that I don't think is going to change in a hurry. But I think everybody in the industry, clearly sees that the key and the reason why alternative payment mechanisms, AMPs, APMs, are becoming, lumped in with this whole issue is simply because you need to onboard the customer, you need to create a billing relationship with them, and then once you've created a relationship with them from a service point of view, you then want to migrate them to payment mechanisms where you're going to be making a bigger margin, which makes perfect sense. That by implication means that all of those things need to fit together, right?
Absolutely. I think that's spot on. But there's no escaping the fact that merchants view cards as an easier way to do it all. And I think what you're going to see, what operators are going to have to bend to this slightly. They're going to have to drop the rates. They already have in Europe, where suddenly it's become a kind of much more mainstream sort of payment tool, particularly in Germany with this sort of payment agent model. Tomoko's now rolled that out into Austria as well.
Yeah.
That suddenly you could use DCB for all sorts of things, like buying something from a vending machine and for hiring bikes, scooters, electric vehicles, that all that kind of stuff, charging, all sorts of things. And I think like that's sort of forced operators in Germany certainly to look at the sort of pricing model for DCB. And I think if DCB can maintain its position in this MVAS market globally, in each of those regions where it does such big business, they're going to sort of chip away at the cost, because the more people that use it, the more money the operators will make, the more they can probably afford to take a smaller cut and still make a bigger profit. So I think it's interesting to see how that may yet be what sort of pushes DCB along
Yeah.
if the operators play ball. Otherwise, they're going to sort of lose it all to these alternative payment mechanisms.
Yeah.
Those are going to infiltrate MVAS everywhere, not just in developed markets.
Yeah. Well, and the interesting thing is, Paul, that it's not as simple as that, because if we then start to move on to the next level or the next stage of the conversation, and we talk about the payments industry with regards to how it's developing globally, which is not a linear discussion, and because we went to Dubai for the reasons that we've mentioned earlier, in that MENA, Africa, Asia are developing at a rate of knots. Those markets are not necessarily evolving in the same way. And I noticed that, again, we referenced the interview you did with Siddhartha Roy from Hungama, who started to talk about the fact that, well, if you think you've nailed it in Africa and you think you've nailed it in the Middle East, by the way, we're doing things a little bit differently in India, which of course is a massive market and certainly a market that, well, almost everybody we know are focusing on. And of course, they've started from a different point, and they're doing things really, really differently, aren't they?
They are indeed, yeah. In India, they don't use carrier billing particularly. The Indian government set up a sort of API, an application protocol for a wallet that they gave away free to all merchants who wanted it. So anybody could build in a way of taking wallet and alternative payments.
Which is brilliant, right? I mean, it's brilliant.
Well, it's brilliant, and it costs an awful lot of money to the government. However, so many consumers want to use it. It's made it so easy to do stuff that it's seen more people open bank accounts and start money to start to move around legitimately, increasing the tax revenue for the government. And so it's had a sort of a really sort of strange sort of positive upside for the government as well as for all the people, and totally revolutionizing the digital economy, the massive Indian market.
Yeah. Why don't we have a listen to what Sid had to say about that?
So we've got mobile value-added services, but we use alternate payments in India to be able to satiate consumer needs. We have a universal payment system, the UPI, which is massive. You have the ability to get customers to try a product and then use those payment systems to charge them. We also have Wrecker in place as well, which allows you to acquire a user and then month over month you can subscribe the customer. So that's what's happening. India's a massive market. You can define language, genre, product, and be able to get a segment which could be as big as probably.
Is there any chance of sort of carrier billing becoming a tool that's used in the MVAS market in India, or is it just bypassed that and has gone its own way?
It's actually, we've skipped that generation is completely skipped, because India now, the telecom business is completely structured on a all you can eat pack. When all you can eat packages happen, there is no money in the mobile wallet for you to be able to charge for mobile product. So that is the big differentiation. Now in the future, if the telecom networks start turning themselves into having products that allow for consumer to have a certain value in their wallets, that is when I see MVAS coming back, the mobile VAS coming back through the telco ecosystem. But I'm saying that we should not be so focused about us being able to take money out for our services where consumers buy our products out of the telco wallet. Till the time any other form of payments are available as a product and services and platform company, we welcome it all. It doesn't make a difference if it's coming out of the mobile wallet or it's coming out of an alternate payment system.
Okay.
Well, blimey, we've talked about this many times before because we're so old. We remember the opportunities with the likes of BT, T-Mobile, some of those big Leviathan European MNOs that had the opportunity to be banks and provide banking services and payment services, they chose not to do it. And now, fast forward 20 years, we look at an advanced market or an advancing market like India, and the opportunity to be a payment mechanism provider or a payments provider has been completely taken away from the mobile operators. And they, I wouldn't say reduced to, but they have been forced to become really content distribution channels because the payment mechanisms have been taken away, and that's an opportunity that they for sure have missed. So I think India and what Sid said there gives us a really interesting view of how developing and evolving markets will probably go. We talked earlier on about banks and whether how active they're going to be in the space, and I still think there's an opportunity for that to happen. But boy, oh boy, we're not seeing too much evidence that the MNOs have really grasped this, and it seems to me as though in the long term, they're going to become a less and less important player in the payments market as other more effective mechanisms come online.
It could be, and I think as sort of Sid eloquently puts it, and sort of summarizes the Indian market, it's a vision perhaps of the future of MVAS everywhere, in that it's not, because consumers everywhere are now just getting all you can eat bundled packages. So it's not about sticking things on a phone bill or anything like that. It needs to come out of that data allowance, or it needs to come out of that voice allowance. And, it needs to come from that bit that they've already paid for. So how on earth do you monetize this? You need to do it in different ways. And I think the way India bypassed DCB completely, it sort of shows that they've leapfrogged into that. But I do wonder whether we're all shifting towards that model because of how telcos have to part of the price the sort of data packages for people. We're going to have different ways of billing for the content. Though, as he nicely sums up, really, we shouldn't be too focused on that. As long as the content providers are getting the money, does it matter? And I think
Well,
that's really what I came away from the whole sort of payment side of it in Dubai, thinking, well, maybe that doesn't matter. Maybe it's
yeah,
really just about how you move the money about from the punter into the sort of content owner and everyone else in the value chain's wallet. And
yeah,
it does potentially give operators a role in this. It makes them not
of
dumb
course.
pipes. It makes them media companies.
Yeah.
Whether they'll grab that like they failed to grab being banks, they've had the opportunity to be media companies. It's all become, they've never moved quick enough. But I think, the impetus now might be there because this MVAS sector is no longer just about the kind of peripheral things we used to talk about. This is mainstream entertainment.
Yeah.
Big, big $1 trillion business.
I was going to put a conclusion on that, but I think you summed that up perfectly. Absolutely spot on, Paul. It's a constantly moving target, but ultimately, consumers want to buy the products that telemedia merchants are selling. And those merchants don't care how they're paid for as long as they're paid for. And the other side of it, which is becoming more as equally as important, is how do you market to them and how do you engage with them? And whatever payment ecosystem exists around that is kind of irrelevant. It's as long as you're able to maximize your conversions by offering the most amount of payment options available to maximize your conversion rates, and that ultimately is what it's really all about. But it will be interesting for us to continually track how the MNOs tackle this. Equally, how the banks tackle it, and I suppose my final point would be if you want to maximize your conversions with the best array of mobile and alternative payment mechanisms available in the territories that you want to sell your services, then I guess you've got to come to World Telemedia on the 5th to the 7th of October in Marbella, where you will meet all of the leading lights in this area, and you will certainly be able to bolster your business and develop your strategies going forward. So, listen, Paul, thanks very much. It's been a payments extravaganza. We will meet in 2 weeks' time, and I can't wait to find out what other
Well, we've done
Pearls
marketing, we've done payments.
I guess we're going content next week.
I think it's content.
So if you like and if you're interested in what we're talking about, please remember to like and subscribe to our YouTube channel. And please send us some comments. And we'd love to hear from you. And we'll see you again in 2 weeks' time. Thanks very much for listening.
Take care. Bye.